The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, cattle futures on Friday had a solid close into the weekend. All of that ahead of the July cattle on feed report and the return of the July cattle inventory report. We're going to break these reports down and talk about it. Joining us now, Ross Baldwin with agmarket.net. Ross, welcome back to Market Talk. It is good to catch up with you again, and busy day of reports after the close on Friday. Let's talk about them. Cattle on feed down 2%. Any big surprise with the on feed numbers, Ross?
Hey, Jesse, thanks for having me back again. The on-feed number, it came in a little bit friendlier than what the guesses were. 98.4%, guesses were 99.1. There's no question it's friendly, and I don't think it's a huge shock to the market. I mean, we all know that we're at record high levels. We're priced in this tight inventory. So on feed, I think it just continues to set the stage moving forward that this market, it's going to be hard to break it, as well as all the other numbers that we'll get into moving forward. But on this report, I really think on the cattle on feed report, the placements number is the one that jumped out to me the most. We saw placements come in at 92.1 and the guesses were 98.1. The other thing that really jumps out to me is last year in this report, placements were 93.2. So it was a low number that we were benchmarked against. So to come in well below even what we were last year when you factor the two together, and then the miss versus the guesses, this placements number is the one that I think will probably have the most impact on Monday's trade, or as we start getting out into next week, because that's a big miss. And the marketing's number was 95.6 versus 96.1. A little disappointing, I guess, when you look at marketings, but that's no surprise. I mean, probably the biggest reason it's disappointing is there was one extra marketing day, but with how slow throughput's been at these plants and the lack of slaughter that we've seen, this marketing's number is just not, it's not the major number in these reports versus on feed and placements.
Yeah, that placements number 8% below 2024. Interesting to see that. Well, maybe we tie this in and talk about the cattle inventory numbers as well before we just talk broadly about these markets right now. July 1 cattle inventory down 1%. You mentioned this to me, of course. We're comparing this to numbers from 2023 because this report is coming back after USDA got rid of it. So, I mean, as you glanced at the cattle inventory numbers, anything big stand out to you, Ross?
I don't think anything big jumped out to me in the inventory report. Like we said, it's difficult when you're looking at this versus the data from 2 years ago, since we didn't have this report last year. But I think some of these numbers, though, they did come in above what the trade was thinking, and so it did seem that the trade was factoring. I don't want to say that it's not friendly, because we know this market environment's friendly, but the cattle and calves came in 98.7, the guesses were 98.4, not a huge miss. But when you look at the annual calf crop, was 99% versus 97.8 was the number there. The beef replacements did come in at 97.4 versus 97. I mean, very minor adjustments versus what the trade was thinking. So I really don't think that there's any numbers that are really going to be impactful from the inventory report. There's just no question, though, when you compare the two of them, the inventory report and then this recent cattle on feed report, I do think expansion is underway. And another number that came out of the cattle on feed report is we get a look at heifers on feed in this report, and heifers on feed was 38%, which was down 5% from 2024. And so as you do have fewer heifers on feed, we are getting to where we are in the expansion mode for the industry. And I think you can see that a little bit in this inventory report, but I mean, we're still a ways away, though. I mean, expansion is just getting underway, and it's slow. I mean, we're not seeing any crazy numbers of heifers on feed well below 35% into the low 30 percentile like we were down to in 2015, around that time frame. So we've got a ways to go in this market.
So, thinking about these numbers and just overall market sentiment, we've been seeing a little more volatility here as of late in futures. Cash was fairly quiet, it looks like, this week, fairly steady for the most part. I guess, what's your thoughts? What's the overall market picture looking like here as we close out July and get ready to head into August, Ross?
The fundamentals seem alive and well, and it's gonna be hard to get a meaningful break in this market unless there's something that comes from out of left field that none of us can predict or talking about. But as far as the fundamentals go, I mean, you look at this placements number, and I think this placements number, this 92%, which was well below the guesses like we talked about. Part of that is heifers getting kept off of the market for replacements. So you are going to, as you start the expansion phase, you're going to place fewer cattle into the feed yards, which I think long term is something to keep an eye on. But for right now, we don't have the numbers coming at us. And if the expansion phase is starting, which I've been in the camp that we have to start the expansion phase, but if we continue to work towards expansion, we're going to place fewer and fewer moving forward, which in turn is going to support this feeder cattle market. And so the feeder cattle market's got, I like to think of it, about three bullish factors that are going for it. Number one has been the price of corn. Corn does not have a story. We all know that. Corn's stuck in a range here, but you start talking sub $4 cash corn, and the cost of gain for these cattle going into feed yards is as cheap as we've seen in several years. So you've got that going. You've got these massive record profits that cattle feeders are making. When you're making profits like that, you're going to continue to go spend money on feeder cattle. And then the other third factor is if we start in the expansion phase and there's fewer feeder cattle to buy or to choose from because heifers are being kept off the market, that's naturally going to elevate the price of feeders. So feeders are going to be extremely hard to crack. And which in turn, I mean, from a supply situation or a supply standpoint, this fat cattle market's going to be hard to break. We've seen it time and time again as the packers have slow played it, not bought very many cattle for 2 to 3 weeks on end, and it catches back up to them because the numbers just aren't out here. And so from a leverage standpoint, I don't see it changing a whole lot unless something else would happen to where we saw more meaningful changes on the production side. And what I mean by that is if eventually a packing plant went offline. And right now, the way this thing has went, I haven't had any reason to believe that's the case or that we're going to see that anytime soon, but it'd have to be something like that would materially shift this leverage.
Ross, from a risk management standpoint, anything you would throw out there for cattle producers now that we have this data and we're looking ahead to the month of August?
Yeah, I think from a risk management standpoint, you still got to be cognizant of the levels that we're at and the positions that the managed money crowd's holding. I mean, we've seen the managed money crowd make new record long positions in the feeder cattle market for several weeks in a row now over the past few months. And at the levels that we're at, anyone involved in the cattle industry knows that 330 feeder cattle on the board and a 220 plus live cattle board, these aren't normal prices. In the long term, if you could zoom out on this picture, this chart, and a few years from now, we'll probably look back and be like, man, then why weren't we managing more risk, at price levels like that? We all know how it is, but in the environment that we're in right now, I think it's just, it put options is what makes a lot of sense. I think at least have a floor underneath of this thing. It gives you the flexibility to participate in the upside. I mean, which is what we've seen here over the last several months. That don't mean that that's indicative of future performance, but with these numbers that we're seeing from these reports and knowing what looks like expansion slowly starting, it seems like this market still has more room left in it to run. But at a minimum, continue to manage your risk, lock in profits, make money, but at a minimum, have some puts underneath this thing, or just have a floor in place, because anyone that's been in the cattle market, we all know how quickly things can change. And as we know in any commodity market, it's always the most bullish at the top. There's seldom, very few signs ever that a market's gonna top out. And so I'll be honest, I nor anyone else in this space knows where the price is or when it's going to be at this market tops out, which I think it just makes it, just huge that you have at least a floor in place in case something would come from left field that changes this thing. Because with the positions that these managed money crowds they're holding, if something sparked them to start covering these positions, it could be one of the most violent sell-offs that we've ever seen in the cattle market. And over the last several years, we've seen some violent sell-offs, but at these price levels and these positions, it could be extremely violent.
Ross, great conversation. We always remember that risk of trading futures and options can be substantial. Anything final you'd share, either the cattle side, or if you want to give us a few quick thoughts in the grain markets too? I know things have been tough there. It's up to you. Final thoughts, anything you'd have for us here on the show today?
I think on the grain markets, I mean, seasonally, we're just in a window where it's tough sledding. And the majority of the corn belts had adequate moisture, plenty of moisture, the most that we've seen in several years. But I think this corn market's extremely range bound right now. I mean, soybeans seem range bound as well. I mean, you're starting to hear a little bit more chatter. I'm in western Iowa, but you're starting to hear some more chatter in the central Iowa of just being too wet here. And with beans being made in August, I mean, there could start to maybe be a little bit of a story on the soybean side of things. But I think, I mean, where I'm at and the travels that I've done here recently, I mean, this corn crop, it's big, and it looks as big as advertised. So it just, corn and beans just seem like it's going to be a little bit of a struggle. And then if I just go spin that right back into the cattle market, like I talked about earlier, I mean, with this corn market where we're at, it's so bullish for the feeder cattle market. I mean, it just, the cost of gain that cattle feeders are looking. I mean, we're looking at the highest cash prices that we've ever sold. And over the last several years now, we're looking at the cheapest cost of gain that we've had. And, you know, that doesn't last forever. So I think from a cattle feeding standpoint, manage your risk on your feed side too. I mean, get some corn locked in. And honestly, with where the price of fat cattle is, you start talking sub $4 cash corn, I wouldn't be scared to get a vast majority of your corn needs locked in for the year at these levels for cattle feeders.
Great thoughts. And Ross, I know if folks want to reach out to you and the rest of the team there at agmarket.net, take a look at your intel and much more. I know the easiest way, go to the website. You guys have a lot of great stuff available there, right, Ross?
Correct. Our website's agmarket.net, and you can find any of the ag market brokers on there. You can subscribe to our intel. And if you want to talk to me directly, my office number is 712-373-3276.
Ross Baldwin, agmarket.net. Thanks for joining us to talk about these cattle reports and recap things. We appreciate it as always. We'll let you go, and we'll look forward to talking again soon.
Hey, thanks, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.